guys, hope your day is going well. In this video, we are going to talk about back testing. There's a lot of you that don't know how to properly backtest or don't backtest at all, which I find crazy because how I learned my system is from backtesting. So basically, when you're backtesting, you want to figure out everything about your pair. I recommend only trading 1 to 3 pairs max, because of the fact that you're trying to figure out each pair. If you're jumping from pair to pair, like you have 20 pairs on your watch list, you're never going to be consistent. You're never going to be successful because you're just trying to get in trades at whatever times. There's a very strategic way to do this to become successful and consistent. And the number one thing is you have to backtest. You have to figure out what numbers it's moving from majority of the time, what exact times, not just sessions, what exact times, 7 a.m., 8 a.m., what times you have to get in, how the reactions react to prices. There's so many things you need to learn about your pair, and each one is very unique in the way it moves. So backtesting is crucial. Also forward testing. So obviously getting a demo account when you first start and forward testing and taking trades and stuff like that and learning how the market moves. Honestly, I think the hardest part is learning the strategy, but once you master it, I think the hardest part is patience. Like 90% of it is discipline and patience. So when we're back testing, it becomes easier and easier once you get the hang of things, because we can just like replay it and play it super fast, where in a live market it just takes time, right? Like every 1 hour candle takes a little bit of time, right? So that is the difference. So I'm going to show you how to properly backtest. So what we're going to do is we're just going to minimize these prices here, and then we're just going to go back in time. So the reason why we minimize price like this is we have no idea what's going to happen. So I did this for a year on GJ and EU, and that's how I figured my system out. So it's a lot of work. You gotta put in effort if you want to be successful and consistently profitable. So in this case, for example, we're on the 1 hour time frame. If you're practicing your entries and stuff like that, and you want to go down to get entries, like go down to lower time frames, you have to not go back super far. So like in this case, we can probably go, let's just say like December 31st, Tuesday, that works. So you don't want to go back too far because then you can't go down on lower time frames. Like it will block you from going down there. So you don't want to go back too far when you're back testing. Okay, so this is what we're working with here. So what we want to do first is we want to identify the reactions of where price is reacting, where structure is reacting to the prices. So when I say prices, I'm talking numbers on the right-hand side. These are all super important. And I know a lot of people don't talk about it because a lot of people don't know, honestly. And I have been in this industry for 11 years now, and I've learned it all, and I know what works and doesn't work. But I promise you, this is where the money is going on the prices. Okay, so for the major zone, we're gonna do it on the 4 hour time frame. And so what you can do is you can draw the zone like this, and you can also extend it to the right and left if you'd like. And then basically, we had a rejection here. Okay, so basically, this is showing bearish, 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 and obviously bearish. So that's kind of how we get the direction. Is honestly, it's so simple. You just look left. If, however, these two prices at the zone were to break above, it would be bullish. Like it could continue up to this high or this high, but it managed to sell off multiple times. So it basically hit those two prices, respected, and then continued down. So that's how we know it's a bearish bias, if it respects those two prices. So we have a major zone on the 4 hour time frame. The zone cannot exceed 20 pips. So like if you drew it from the candlestick body down to here, that would be way too much. So that would be about 26 pips. So you don't want to do that. It cannot exceed 20 pips. And these are just my rules. This is what I have figured out. Everything that I say in these videos, it's what I have personally figured out. So if someone tells you, no, the zone should be 50 pips or whatever, they're trading a complete different strategy that, well, I don't know why anyone would use 50 pips. But everyone has their own method, so whatever. But in my method, it's 20 pips max. And the reason for that is because you want an accurate stop loss and you want an accurate entry. So what we're going to do is, so when you're back testing this, honestly, the easiest ways to identify reactions is literally just taking the highlighter tool and identifying them. The more that you do this, the more it makes sense. And then you can add the zone at the highlighter. So we have a zone right here. Again, we're going at the candlestick body and we're putting 2 prices in here just in case we miss an entry. So like if you wanted to enter here at 765 and you missed it, you can enter at the next number, which is 929. Okay, so we have our 2 major areas here, and then when we jump down on the 1 hour, we can identify our 1 hour zones. So these are our minor zones. I call them basically break and test areas. So we can also identify the 2 prices at the zone and see how well they react. It's crazy how this works. When I figured this out, I was in shock, because I struggled for so many years learning so many different strategies. And I was like, none of this works. None of it's consistent. All right. So basically, so with your 1 hour minor zones, you can have a different color in there if you want to identify that it's a 1 hour, or you can write the text here and you can put 1 hour zone. Like, it's totally up to you and how you want to do it. Okay. So basically we came to major structure here. We ended up testing in twice. So we had 2 reactions. So the first reaction is not like when price first comes down to that specific price at 929. It's never going to continue up. It's going to test in again because of the fact that different time sessions are coming in. So this is Tokyo, this is London. So London's going to bring it back down to that price and then add buy orders, and then it continues. The second reaction sometimes can manipulate as well. So you just have to be careful of manipulation. And this is exactly why you back test what exact times you should be getting in. Okay. So basically what this is showing us is it's showing us that we have, so we came to, you can add in as many minor zones in between as you want. Why I'm adding this one is because it reacted here. So it was bearish all this time, and then we broke above, tested in, and then here we created an imbalance of structure. So in my eyes and how I do it, if a candle breaks a specific zone and it doesn't retest it, it will come back up and fill it and then basically drop from there usually, unless it ends up in this scenario breaking and testing structure, then that's a different story. But usually it fills the imbalance and then continues back down. So basically, this is telling us in regards to direction that this is bullish. So this is bullish and this is bullish. So if these 2 prices at this zone cannot break below, it will reverse and it will be a buy. So we have 2 reactions here, and then it ends up buying. So let's just say, for example, you set an alert. I'm a huge fan of creating alerts. Like, if price was here and you couldn't trade and, you see the next major zone down here between these 2 prices, I would set an alert at these 2 prices. Once it comes down there, you can look for the proper reactions and price action, and then you can enter rather than fishing for trades every single day. So I find that's the best way to do it. So let's just say you set an alert and we ended up entering at, let's just say, 929. Okay. So the more you go down, the more price action you can see. So basically this was the first I need my highlighter. This was the first reaction in, this was the manipulation, and this was the break and test. So essentially you would wait for the manipulation and then you would get it on this break and test here. You would set your stop loss. So in this case, we could have probably like a 20 pip stop. You can do, you can do bigger, but I would not do smaller in the sense of just in case it manipulated again. You want to give it some room. So I would say anywhere from 15 pips to 30 pips max for the stop loss. So once you get the entry on the lower time frame, you can go back up to the 1 hour and you follow through. If you stay on the lower time frames, you're going to get so confused. There's so much moving every 5 minutes and you're going to take profit way too soon. So I highly recommend going up on a higher time frame. So in regards to this, so if we took our entry here at the 929, basically we're looking to see where our target is going to be. So of course, there's a lot of price action here because of the fact that it ended up ranging for a bit. So like I said, you can still identify some of these and put the prices in to just make sure that this zone breaks. So essentially, like this is a minor zone in between, so it should break. But the point is you want to have it at this specific structure and make sure it breaks. If that number doesn't break, it can correct further down. And so that's what you have to be aware of. And then what you can do, if this is your first TP and it's rejecting, you can either take profit, or what you can do is you can put your stop loss just a little bit under that, or like a stop loss in profit. That's the best way to do, kind of like a trailing stop. Or what you can do is, like I said, here's a minor structure in between that broke and tested. If this number ends up respecting, then basically you can stay in and it will go up to this next area. Okay. So let's just see. So like I said, in regards to your targets, it's such a personal preference and whatever you want to do. So let's just see how it reacts. Oh, wow. That was like perfect. Okay. So it ended up, so I got the prices, or I got this price from over here and over here and here. So basically it came down and it reacted. So like I said, you can put a price in here. If it doesn't end up breaking, you can take profit. You can put a stop loss in profit, or what you can do is just add numbers. Like even I would add one here. And if all of this breaks, then you'd have to take profit, but you'd be close to break even, right? But the point is just letting it run and adding those numbers in there. And if they respect, you can hold on to your target. So again, up to you. So this ended up respecting 343. It ended up breaking and testing the 700, and it ended up going to this TP. Okay. So basically what you can do, so this is almost a 1-to-6. This is 123 pips. So what you can do is you can see if it ends up breaking these two prices. And if it does, then it will go to this next structure right here. So let's just see. Probably correct first. So if this holds, which it looks like it is holding, that is an indication that this can break and go to the next structure. So another thing too is like, if you were to take profit here, you could re-enter here, or you could re-enter here. But you need to understand that right now it's a bearish trend. So we're entering in on a counter trend in this sense on the 1 hour, right? So eventually it's going to come back down. It's going to probably fill this imbalance if we can break above these prices and then go lower, because of the fact that we were going up for so long that it's starting to trend down. So you have to be mindful of what the trend is, right? So anyway, so this ended up respecting. So these two prices have to break. Let's just see if they do. Okay, so it came down again, tried to manipulate. They're trying to manipulate sellers to sell off the zone, and then basically it comes back up. So this is why it's important to understand where the imbalances are, because the imbalances do fill. So basically this ended up testing into 481 and then filled. So to be honest with you, if I was in a buy, I would get out, because since it filled that imbalance, it usually drops hard. Again, I know this just because of experience, but we'll just see. Because, I mean, there is an imbalance right here that can fill, but we'll just see how it reacts to price. That's the thing, is you don't know. You don't know until there's more price action. So in this case, so two of our zones broke, and then we could basically bring it to here. That's a 1-to-7, 155 pips essentially. So I personally would get out, and then, or if you didn't take this buy, I would sell here at the imbalance point, put my stop loss above. In this case, this could be 15 pips. And then basically what's fun about this is the same prices are the same targets for going down and up. So this would be target 1, target 2, 3, 4, etc., etc. You can have as many targets in there as you please. So this would be my target 1. I would have to make sure this price stays below and this price stays below. So let's just see. Okay. So technically, if you missed it at the imbalance zone, you could take it at this next zone. Just make sure you put I would put my stop loss here. I would have it a little bit higher, between 25 to 30 pips, because if you entered too early, it would have stopped you out, especially spread and stuff like that. So you have to give it room. So yeah, if you missed it at the imbalance, you could enter here, give it a little bit of room. And then once it starts trending, obviously, you can move your stop loss closer in, and then you can even move it closer to your target. But don't have it too close, especially when it's trending well. So essentially, this would be TP1, TP2, 3, and 4. So we want to make sure that all these prices end up breaking. So let's just see. It looks like, I don't think it's going to come up here. I think it's ready to go. Let's just see. Yeah, that was a beautiful retest. Okay, so what's crazy about this, if you're in London or Europe or somewhere where the times are in the morning or in the afternoon for London and New York, oh my God, like take full advantage of the trend. So you can enter multiple times on these break and test areas. I don't teach to enter multiple positions at one price, because if it manipulates, you are screwed, to say the least. So you want to make sure you have that confirmation. So I enter one trade at one price, and then as it's trending in, I tend to add another position. So my times suck. They're between 1 to 9 a.m. So it's hard for me to wake up and, just keep adding in positions. But for the people that are awake at this time, oh my God, take full advantage of it. So you can add in extra entries at these specific prices once they break and test, and you get that confirmation. So anyway, this would be the major target. So that would have been a 1 to 5, and obviously you move your stop loss at least to in profit, close to break even, or even close to the target. So this obviously ended up breaking and testing. Here's another clear entry, and then we're going to look left to try and find our target. So we can jump on the 2 hour, the 4 hour, it doesn't really matter, just a higher time frame. So basically what's happening here is it's coming to a specific price in this case, and it's reacting. So if you can see on the left hand side, this is showing, well, this was once bearish, but this ended up breaking. So the two recent reactions were bullish. So if these two prices can't break below, then it's going to essentially correct a little bit, okay? So it just depends on if we can break below. So again, there's multiple reactions in here. You can put in extra prices if you want, just to make sure that they stay below, okay? So obviously we would move our target down to here. So that would be at 1 to 10, 280 pips. So we'd have to make sure that this zone continues to break, because if it doesn't, it can return to the upside, and basically it can fill this, because that created an imbalance and this created an imbalance as well. So it has to break this zone. So let's just see if it does. Look at how well it's reacting to that added number I added based on the left. It's insane how well this works. Looks like it's heading up. Yeah. So we fill this imbalance, tested in here at the major structure. So this is indicating bullish, unless it broke and tested, which it didn't, and manipulated and then closed. And then we carried up, because you can also measure it. You can measure how long it's been dropping from. So this was Wednesday to Oh, okay, that was only a day, but still. And then from here, from that Monday, so it's dropped a lot. So it's more than likely to correct and fill the imbalances. So basically, and then like I said, so you'd be out of this trade by now because it came to the major structure, it's reversing. So again, you can buy this and the same prices are going to be used for a target, and it's going to react over and over and over again. So let's just stop the entries and exits for a second, and I just want to play this and I'll show you how well it reacts to what we have. Insanity. Obviously, I didn't draw down here, but let me draw down here quick. And it's all based on the left, so it will all react on the left. But yeah, so point is this is what I figured out with backtesting. Like, it reacts every single time. This manipulated, but it manipulated to this price. There's an extra price here. Broken, tested, tested, tested. Insane. So that is why you want to backtest, because you want to figure out literally everything that I just talked about. And then obviously you can backtest the actual days. So you can go in and backtest like what exact day this is, what exact time you should be entering and exiting, etc., etc. But yeah, I just wanted to make this quick video. Please backtest. It is so crucial for your success, and you'll learn so much about trading. If you guys have any questions, comment below. Please like and subscribe.